Hello and welcome to the Mainstream Mortgages podcast. My name is Derek Vandell, and I'm joined as always with my co-hosts Peter Paley and Colton Boudreau. Today's topic is about debt, collections, judgments, consumer proposals, bankruptcies. What happens when you don't have the greatest of credit, and how does that affect your ability to qualify for a mortgage? So, first question I'm going to ask to Peter. This is about consumer proposals and bankruptcies because I think it's important to be able to differentiate the definition between those two. So, what is the difference between a consumer proposal and a bankruptcy?
I'm going to also throw in the debt settlement in there too, but we'll address consumer proposals and bankruptcies. So, consumer proposal is paying a reduced amount of debt over time, where a bankruptcy is kind of the same thing, but you're also giving up your asset in the bankruptcy. So, you're still paying some of your debts over time, but in bankruptcy, some of your debts will be eliminated based on the assets that you give up. And then what we really want to talk about today is debt settlement. So, for people who have not yet entered into a consumer proposal or bankruptcy, and maybe you have some collections, judgments, things on your home title, missed credit card payments that are 3, 4, or 5 months late, debt settlement might be a really great solution for you because it reduces the amount of debt that you owe, but all you have to do is pay it in one payment, either through cash you may have on hand or from a gifted family member, or more importantly, through a mortgage that we arrange for you.
So, before we get too far, you mentioned collections and judgments. We differentiated the difference between a consumer proposal and a bankruptcy. What's the difference between a collection and a judgment, Peter?
So if you don't pay your creditors, they can just sell your debt to a collection agency who will keep calling, phoning, emailing, texting, mailing you advices till you eventually are worn down and start paying your money. A judgment means that the credit card company or the lender went to a judge and was like, "Hey, give me a judgment." They put it on your permanent record, and then you can't do anything with your credit or property ever again until it's paid off. So if you sell your house, that judgment gets paid off. If you try to refinance, the lender's going to be like, well, you got to pay off your judgment. So it's a legal tool that lenders can use to force you to pay at some point in the future.
So, really important to note that you can't really do much in the way of mortgages until you clear your name from all these collections, judgments, or consumer proposal or mortgage, right? Um, I guess this is the basically the purpose of this podcast is, like you said, debt settlement. That's where the debt settlement comes in. So we can refinance our home to pay off debt, correct, Colton?
Yep, that is correct.
Awesome. So in in what cases would I not be able to refinance? Like if is there a situation where my credit history is just so poor that I just can't refinance my mortgage?
So first and foremost, you're going to need enough to have enough equity in your home, right? So most in the bad credit cases, they can go 80% of the value of the home, if not 75%. Um, and obviously, the tougher the file, the worse the credit score, the more judgments or you know anything like that on the bureau, your loan to value can be cut by these lenders. Typically speaking, though, our alternative lenders will go to a credit score of about 500 to 550. And if it's worse, then you're going the private side, and even then, your loan to value is getting cut. And depending how much debt you own, how much the home is worth, it could really impact the overall application.
Right. Okay. So essentially, if there's enough equity in the house, then there's probably a solution somewhere.
Correct.
Um, and what about that's for refinancing, but what about when I'm wanting to buy a house? If my credit is not perfect, Colton, can I buy a house?
So it depends. Again, it depends. For an insured mortgage, so 19.99% down payment or less, your credit score will need to be over 600. Judgments, collections will need to be paid prior to advance. as well as we need the story to confirm why those are on your bureau. If your credit is bruised and it's say, maybe under 600 or just over, and you have a collection or two, we can look at the alternative side. Again, you need 20% down or more with the story, but typically speaking, most of our lenders do want a collection to be paid out prior to purchasing a home.
Okay. Awesome. So going back to, I guess, the, collections, judgments, all that kind of stuff, going to consumer proposal or bankruptcy, a lot of these can be settled through like a debt settlement type of company. Peter, can you kind of speak to that? What should I do before I talk to a debt settlement company and go through the proceedings of a consumer proposal or et cetera?
Well, just to clarify, debt settlement replaces consumer proposal or bankruptcy, and it's for people who can do the one-time cash payment to settle their debts. A debt settlement company, if you have, like I said, missed payments, collections, things on your title, the debt settlement company is going to go with their lawyer to the debtor's lawyer and also make and negotiate a settlement, and they can reduce your total overall debt between 25 and 80%, and you do a one-time payment. So this is where you're going to either need to have cash or a family gift or a mortgage refinance ready to go. And where this really comes in for us on the mortgage side is Colton already talked about lending ratios just a little bit while ago. Well, sometimes people have too much debt or they lost their job or something really bad happened where they don't have enough equity in their house to pay all their debts off in full. But if you're already in this position where you're considering going to a trustee for a proposal or a bankruptcy, it might be a better solution, cheaper solution, and definitely a more time efficient solution to do debt settlement because maybe we can't get enough equity over your house to refinance you 50, 60, 100,000, but maybe we can get that debt reduced to like 25, 30, or 50,000 and make your deal work. And the fees are really quite reasonable for the amount of money that they save you. Like you end up paying a fee based on the amount of money they save you. It's a small percentage of that. And it's a really great way instead of avoiding consumer proposal or bankruptcy, because I mean, those whole processes take years. And then after you finish it, you have to reestablish your credit, which is at least another 12 months, but usually 24 to 36 months. So if this debt settlement opportunity is a solution for you, like you can do it in about 3 weeks, all your debts kind of paid off right away, and then you can start rebuilding your credit. And hopefully, we got you an excellent mortgage where you can stay in that for a year or two, and then transition back to the bank side, right? Because they're not going to look at you, and these alternative lenders will. And it's a really great solution to try to package it all into one neat little bundle instead of wasting like 3 to 7 years of your life trying to reestablish your credit.
Agreed. So I have a few quick questions here. Um, Colton, if I have CRA debt, can that stop me from getting a mortgage?
Yes, it sure can. Long story short.
Yeah. And I heard that, these collections, consumer proposal, bankruptcies, all these kind of things, can just kind of disappear off my bureau after 7 years. Is that true, Peter?
Well, yes and no. I mean, what usually happens, like if you're in collection, one collection agency, if they were unsuccessful doing for you, it'll eventually fall off your bureau. But guess what? Then they sell it to the next collection agency. So, I mean, it's going to take a long, long time. Your bankruptcies stay on there for forever. Like, I mean, even if it drops off, I mean, most lenders and most mortgage brokers can do a bankruptcy search and see that you had one. And we do that in a lot of cases. Um, your bankruptcy has to be paid before it drops off. Like it's not like you can't be in it and not pay it and then hope that it drops off. Like you have to finish it. Same with the consumer proposal, and then it takes a minimum 3 years for it to even drop off. So this debt settlement solution, if it's good for you, can avoid all that. Yeah, you'll have settled debt on your credit for a while, but that'll drop off eventually too. But you don't have to waste all that extra time paying it off. Like it can just be done and you can start rebuilding and working on your budget so that that doesn't maybe happen again.
And Colton, should I, like, would it be a good idea to settle my debt before I even bother applying for a mortgage?
Typically speaking, I would say yes, but it's always good to consult us to ask and see the impacts of the overall application, of course. But typically speaking, eliminating the debt is always a good thing.
Right. And what if my spouse has bad credit? What are some options there, Colton?
Well, if your spouse has bad credit, one, we could just look at the application with you, or maybe mom and dad want to co-sign, or we could also work with your spouse to rebuild your credit. There are ways for us to increase your credit score. Um, and really, that's just a conversation and taking a look at your credit bureau. But there are solutions to having a spouse with, not great credit.
Can I just jump in there too? And I mean, that's
Sure.
probably one of the my favorite reasons about being a mortgage broker and what we do. Is like we always go that extra mile to fix the credit, figure out a way to make sure it doesn't happen to you again. Like you're rolling into your financial institution and they pull your credit and there's a problem, they're done. There's no money in it for them. You become a waste of time. They don't want to have anything to do with you. And they are not solution based because they likely don't have a solution for you. And that's probably one of the best reasons for people who do have bruised or damaged credit to come see a mortgage broker because we might be able to fix you up in no time. Like, I can't even tell you how many clients in the last 2 years or since the end of COVID, really, that we've been able to fix their credit and quite easily.
Fair enough. I think one of the last, or if not the last question would be, can I refinance in order to stop a foreclosure? Like, what if I'm being foreclosed on? Can I actually come to you guys and figure out how to stop that foreclosure on my home?
Go Colton.
Yes, you can. Again, it comes back to the equity, what your home is worth, what the debts that need to be paid. Super, super important, long story short. But yes, we can stop a foreclosure if the numbers align and there is a lender willing to take on that risk.
We can also stop a tax sale if you haven't paid your property taxes and you have the equity. And I think the most important thing to do in these situations is contact the legal counsel of the lender just to say like, hey, we have this solution. Can we have a little bit of extra time? And 19 times out of 20, like they're looking for a solution and they don't want to go through the auction process of like taking over your house. Like it's really expensive and it's a real big time waste. So if we can come in there with a new mortgage and pay everybody out, like they're really happy. And for from the client's point of view, you may still need to end up selling if you can't figure out your money. But at least it gives you time and you can sell on your own terms and not have it just yanked away from you or auctioned at some bargain basement price.
Yeah, I think at the end of the day, if you are looking at any kind of financial difficulties whatsoever, it might be a good idea to reach out to us at Mainstream Mortgages. You can call us at 431-482-2187, or you can email us at greatrates@mainstreammortgages.com. Thank you so much for listening today, and we'll see you on the next one.